so I think we're good to go. Thank you again, Shay, for sharing your views on embracing AI. And welcome everyone here to our second panel discussion at DKF 2024, which has the title, How Will Vendors and Exchanges Impact the Market Data Industries in the Next Years with AI-driven services, and what other disruptions are to be expected. It has been a good tradition here at DKF to discuss these new developments and trends in our industry and what lies ahead of us. And this year again, we do have a very fantastic panel of experts from major exchanges, data vendors, data aggregators, service and infrastructure providers to discuss what these big disrupting changes will be. My name is Stefan Wilhelm. I will be your moderator for the next 45 minutes. So let's start with a brief round of introduction of our four panelists and their companies, and then we jump right into our discussion. At the end of our session, we'll have around 10 minutes for a Q&A. So we'll show a Slido code that you can ask your questions there. So Eglantine, would you go first in introducing yourself?
Thank you, Stefan. So good afternoon, everyone. My name is Eglantine Deshotel. I'm the CEO of EuroCTP. EuroCTP aims at making your life easier, so facilitating access to EU market data, focusing on equities and ETFs. It's a recent company created in 2023, and our key objective is to participate and design, deliver, and hopefully operate the future consolidated tape for EU markets, so participating to the tender process that ESMA will lead starting Q3 2025.
Stephen?
Stephen Dorian. I'm Head of Market Data and Access Services for SIBO Global Markets European Businesses. So SIBO operates 27 markets globally across 5 asset classes in 6 countries, as well as having a fairly extensive index and analytics business as well.
Shay, do you want to?
Yeah, sure. I mean, I just introduced myself, so I'll spare you another introduction. But Shay Popat from Six Group. Run the product and commercial groups there, and very happy to be here.
My name is Garrett Marks. I'm responsible for products and licensing within the Market Data and Services unit of Deutsche Börse Group.
Okay. Thank you very much, and welcome here in Munich. So then let's start with our first block of questions. And I think it's fair to say that AI has been the dominant topic over the past year or two. And this focus on AI leads us to an important question, like, are we perhaps overemphasizing AI, potentially at the expense of other innovative technologies on the horizon? I'm eager to hear from my panel, and not just about AI, but about the broader landscape of innovation in our industry. So where do you see our market data industry 5 years from now? And what are the top? How can we reshape the way market data is collected, accessed, permissioned, and delivered? Garrett, do you want to take this first?
Yeah, thank you, Stefan. The industry, our industry, is definitely in a phase of accelerated change already now, and definitely within the next 5 years as well. This is driven, of course, by technologies, new technologies like AI, cloud. But also, from my point of view, the new business models coming up in the financial industry in general, as well as regulation. And in general, I think that data is one of the most important, if not the most important, ingredients that is needed to this trend. And I do specifically see, first of all, still the topic of cloud adoption accelerating and extending within the next 5 years. This is already going on right now with the focus more on historical products and data management. But I think also the real-time market data provision will find their use cases within the cloud environment. Definitely a majority of data providers will make their data available via cloud. Secondly, I also see the big topic of platform integration, multi-channel or interoperability or however you name it as a big topic. So it's the use cases, the platforms that are coming up are getting broader. There are specifically the new data intelligence platforms like Snowflake and Databricks and the likes that extend their footprint within the financial industry. They might form also an alternative to classical vendor solutions in the front offices of banks and asset managers out there. On the other hand, we also see a lot of smaller, specialized platforms coming up. And I mean, ideally, data will be available via cloud-based data meshes in all these kind of platforms. Easy onboarding within minutes rather than weeks, as we currently have. And this is what I would expect and also hope for. That the market data industry will go into that direction.
And specifically to Deutsche Börse, could you say a word of how AI is present and used in your company, and how do you see its role in the next 5 years?
I mean, first of all, we see a lot of AI use cases coming up in the financial industry, so on our client side. Specifically within e-trading, quantitative investment strategies, and trade simulation, pricing. These are the use cases we are coming up. We as an exchange, we are trying to co-develop solutions there with our market participants. And of course, I mean, as I said, data is one of the most important ingredients. So definitely we try to make the data fit for purpose, provided with high quality, high granularity, to actually allow the usage within AI models of our customers. I mean, specifically in the licensing side, also I think as today in the morning mentioned in the session about AI, we are exploring the usage of AI for licensing interpretation, licensing policy interpretation, or maybe AI could support the workflow automation. Also in that respect, maybe also in the respect of reporting, for instance.
Eglantine or
maybe yes, reacting on the AI, so you focus a lot on the dynamic data, etc., also on the static data. So a lot of people in the industry are doing the same stuff. Not even talking about AI, but AI will allow this to be much more automated and avoiding having armies of back office people crunching data to calculate like free float or everything like this. And definitely, so Shai was mentioning it in his speech, it will lead to some efficiencies operationally, or on top of delivering more data to the different participants, also simplifying the different element in-house, so basically the operations that everybody are doing. So clearly reacting on this point on AI.
Yeah, so I completely agree with Garrett. We've seen a huge uptake of our Cboe Global Cloud product, so more people looking to source both historical and real-time data through the cloud. On the AI side, I think we're still trying to work out the use cases internally. We did create one external product called the Cboe Newsfeed, which really it kind of contextualizes news feeds and derives insights from data using natural language. So, you know, we're seeing a lot of usage of that from particularly retail brokers. You know, they can generate news and insights, not just the price, but what is the data actually telling us. And then outside of kind of AI and cloud, I think there's still two other trends. One's been a lot quieter this year than last, but I think decentralized finance is still fairly prominent. I think I looked up the other day, there was 80 billion market cap in DeFi, and one of the networks called the PITH network, where I think a lot of our industries meet, because they take traditional off-exchange or off-chain market data, bring it on-chain for use of smart contracts. So you can embed an Apple price from Cboe into a smart contract and enter into that on a bilateral self-custody basis. They traded about 7 billion in locked-in value. And if you think about the size of the European market, it's about 42 billion on exchange and about 44 billion off exchange on any given day. So, and where that comes into our realm is, you know, when you get off-chain data on-chain, the traditional licensing models that a lot of us have doesn't really work, because you can't count users and accesses and things like that, especially on permissionless blockchains. So we think that's definitely one of the trends we've seen. And in the US, we've also seen a large increase in derivative-based ETFs Now, everyone's seen the growth of ETFs, particularly equity-based ones, over the last decade. We're now seeing a lot of derivative-based indices for defined outcomes being used. So there was a 77% increase in inflows last year, and the market cap for derivative-based ETFs are 130 million or billion plus now. So I could see that trend also coming to Europe.
Yeah, I think, when listening to my colleagues and actually everything that we're discussing today, it strikes me that technology, innovation, AI, that's not the end game, right? It's the facilitator to what we're trying to do. In the end, it's the content and the data that's really important. I remember, for example, when I was at school, we had a horrible old library with boxes of books. You couldn't find anything. You just didn't go there, right? Because it was just a nightmare. And it's kind of what our industry has been like. And I think a lot of the interactions that we have with our clients around technology is not because they're excited about an API that's been around for 20 years, but actually building a web-based API or leveraging cloud solutions or thinking about AI as it relates to, for example, improving quality, so using data mining platforms and trying to sift through all the content, or whether it's around improving the client experience, so putting ChatGPT into a desktop, or for example how you interact with multiple sets of data. So if you think about portfolio analytics, for example, imagine that you're a portfolio manager concerned on your client's behalf of what the carbon exposure of a particular portfolio might be, whether it complies with UK tax regulations, whether there are sanctioned entities. You want to be able to put in a question on that portfolio and get all the information back, instead of getting lots of files of all this information and the expectation that you have to do the work yourself. And so I think it's really around those themes about making sure that every interaction with the content is just facilitated and made a lot easier. I think that's where the market's probably going in terms of the new participants that we're seeing out there.
Yeah. Thank you very much. I mean, this is exactly where I wanted to go next. So our second block. So after we explored a little bit the innovative frontier, let's shift to another crucial aspect that comes with any technology advances, and that is regulation and ethical considerations. So from your perspective, what new global and regional regulations are we expect in our industry? Stephen, do you want to start?
Yeah, sure. I mean, we wouldn't be in Europe if there wasn't a whole slew of regulation for us to review. But this year we've got DORA. We've obviously had the MiCA around crypto assets. There's the AI Act, which I confess I'm not an expert on, so I'll maybe defer to some of my panelists. You've got the Listings Act. And you have all this with the backdrop of the Capital Markets Union trying to make Europe much more competitive and kind of feel like one more investable universe, similar to the US. But I actually don't think there's still a long way to go with MiFID as well. I mean, the MiFIR 2 review over the last 2 years, we've done the legislative process, but there's still quite a lot to clarify. So we're now in this elaboration phase where ESMA have 9 months to really come up with the level 2 text, the RTSs or the technical standards, and clarify some of the principles that was in that top level text. And I think for most people in this room, I think DORA is going to hit us all, but I think because MiFID hits all exchanges and market data as well as the consolidated tape, there's still quite a lot to come. So if you think about what's not being clarified, one is the mechanics of the bid. How is the consolidated tape provider going to be selected across equities, fixed income, and derivatives? What weighting will be given to pricing, licensing, the technical solution, governance, who the stakeholders are, etc. There's still ESMA need to define the revenue share mechanism for at least on the equities tape. So we know revenue is going to be shared back to the exchanges based on the amount of notional they trade. And there is a kind of tiebreaker criteria where if you're a small exchange with less than 1% market share of pan-European notional, you are exempted from the tape, but if you do opt in, you get a kicker on your notional. You then have on a per security basis whether or not you were the listing venue, so you did the IPO within a 5-year window. And then you have all the notional stemming from any lit or transparent trading mechanisms. So you can think about your opening, your closing auctions, your continuous limit order book, and your periodic auctions. So I think there's still a lot to go there. And then both for the consolidated tape and exchanges themselves, there's going to be a consultation at the end of this month on what reasonable commercial basis means. There's a broad definition in level 1 text about it being cost of production plus reasonable margin. But how do you apply that to the consolidated tape when they haven't got necessarily a cost of production? It's more of a cost of consolidation. So you could see some more kind of formulaic approaches coming there, which may change how some of us think about data pricing in this room. And ESMA also have to still define what does as close to real time as technically possible mean in the context of a consolidated tape and geographical dispersion. And also whether or not ESMA are going to define a protocol or can we select from existing providers. So, and it would be remiss of me not to mention PFOF since we're in Germany, but by 2026 there'll be a ban for payment for order flow, which means retail trading is likely to try to find a new home. And I think you've seen a lot of the exchanges come out with new initiatives. I know Euronext and ourselves and Deutsche, we all have kind of new retail trading initiatives, and I think that's very much driven by the regulation. So, we've had 2 years of legislative debate, but we're not finished with MiFID, despite AI Act and everything else on top of that.
All right.
Yeah, and definitely, so the consultation is a very important moment because after these 2 years of intensive debate, then it's a matter of now deciding how things are actually going to work. So the consultation is really, I invite everybody to participate to this consultation to make sure that what is built for Europe is actually fitted for Europe. So that's a lot of people compare with the US, with what is done elsewhere. So it's going to be something that we also will have to innovate on to make sure that we adjust the tape to exactly to the needs of Europe. Without being the bird of hello men, focusing also on potentially what are the threats of innovation, etc., and artificial intelligence. Moving this also with related to data quality, obviously will be very important for the tape, but more generally speaking, also Europe has come with a DORA regulation linked to cybersecurity. We have more and more data to deal with, so it's very positive, but there can be also negative parts of this where wrong data are pushed to the market. So it will also require AI to better detect what are those wrong data coming and potentially wrong signal or fake information that can drive, unfortunately, some price movement, unexpected price movement, and this is really something that DORA is aiming at addressing. So from a more technical on a more technical basis for now, so focusing on risk assessment. It's going to be very interesting to see also the third party, the famous ICT provider, coming into the lovely world of regulated firm through DORA. So that's really something interesting to follow, to make sure that incident management and response time, resilience of the European market is really strengthened in a context where like all the different players are more and more integrated through APIs, through anything, through data usage. But the purpose is also to avoid the snowball effects that could be very detrimental to the markets. So I'm one of the people exciting with DORA.
All right. Gerrit, what role does DORA play in Deutsche Börse already?
Yeah, this is of course, also one of the topics from a regulatory point of view that we are looking at. We are impacted by DORA because we are using digital services, or how is it called, like ICT. And we are also a provider of that. And I think that, of course, this regulation is important, as you already said, to reduce risks, systemic risks, to increase resilience. We also, on the other hand, we do see the trend for standardization and make it easier to access data for the bulk business. I would say consolidated tape and everything could also support that. Should be a facilitator. As Shay has said, from my point of view, I think regulation doesn't always solve specific use cases, but should be there for facilitating also the availability of data to the broader user side. In contrast to that, we also do see definitely a trend for highly individual specialized solutions and products for the sophisticated clients, which of course, all the regulation that is in place should also offer the opportunity to still, go for other individual solutions. That's very important for a broad amount of users as well.
Shay, when are we expect the AI regulation?
I don't know, but I think look, regulation is, as we all know, right, something that we just have come to live with, and we have to try and work out how we keep moving ahead with solutions to manage the changing landscape. I'm not going to repeat a lot of the regulations that my colleagues already mentioned, but as a company, for example, regulations has always been core to a lot of the services we provide. We provide 70 data on 70 regulations globally, but one of the areas that we're really seeing a lot of change in is the ESG space. I think there's a panel later about the interaction between technology and ESG, because I think Dimitri mentioned it this morning, right? It's very fragmented in terms of the information that's out there. And as we see, depending on which side of the pond you're in, and which country you're in, the pace of change and the adoption of regulation in this space seems to vary, which makes it even harder to think about providing global services, because it's nuanced based on where your client actually sits. So, whether that's reporting requirements around green lending, whether it's around climate risk reporting, I think one of the challenges will be thinking about how you leverage that technology to make sure that you're getting as much information, whether that's disclosed or not, to provide the correct product. So, but in answer to your question, no idea when there'll be a regulation for AI. But there are a lot of pitfalls, as I said in the speech earlier. Security is a problem. There was an article a couple of weeks ago about hackers who have managed to use AI and plug in something like, hey, let's play a game. And then AI says, well, what game are we playing? And you say, well, it's a game without any rules. And they've used that as a backdoor into getting into company systems. So there's reason to be wary of it, as I said, but how and who will be responsible for coming out with sort of best practice standards around all of that remains to be seen.
Right. Well, you brought up a very interesting point about new data or evolving data, which I would like to pick up. So I think it's clear now that regulation not just impacts compliance and so on, but it also comes with the emergence of new data sets and new innovative data sets. And this opens the field for deeper insights and advanced analytics. Right? And with this in mind, I would like to explore a little bit here in this round what new data sets are emerging, or are you see as emerging in our industry, such as non-financial reporting, ESG, level 3, etc. Gerrit, what are the hot topics on the data side?
In general, I think the data categories that you mentioned, ESG data, alternative data, everything that is non-market data or non-reference data as we know it and as we are mostly using it. Most of that data is already there, and I think it's these days about making them fit for purpose, and developing the data sets for specific use cases, facilitation. We actually following two paths in that direction. The one is that we try to leverage also the business model of Deutsche Börse Group, which includes the whole value chain of the financial services industry, from issuance to pre-trade, post-trade settlement, and so on. We want to create integrated new data sets that are sourced by the different platforms and systems that are involved in this value chain. We actually want to build an ecosystem there and make it then easier to use. For instance, create additional analytics, additional information, value-add products like flow information or liquidity indicators, and also some information that we provide on our analytics site, which we call, for instance, high-precision timestamps, information that only like we as an exchange or the trading venue actually has. Now, this is one path we follow. The second path we also follow is the integration of private and public data sets. Again, we co-developed that with our colleagues from the trading side and also with our market participants. For instance, cloud-based clean rooms, specific solutions there provide the opportunity that different parties actually provide their private data that they do not want to share, but still everyone together with specific solutions also provided by provider within that clean room, it can be used without actually looking at the original data. This is quite an interesting field we are exploring to make, to accelerate the integration of specific data sets, and I mean, again, the interoperability in some kind of way, but these are mostly individual solutions, and these are the two paths we're actually following in terms of new data products and solutions.
If I got you right, so you see a increasing demand for real-time analytics.
Yeah, definitely. I mean, we have to differentiate our customers, of course. There's a lot going on in terms of technology with market makers, high-frequency traders. I mean, these are really the ones we are concentrating on in terms of analytics. Also, these are the ones who have a lot of private data, as I said, that they do not want to share, that they want to commingle with our public data, for instance. And from that customer category, there is a lot of demand. The race for speed, but also buy side is coming in with quantitative trading strategies. Also sometimes, AI models behind that or other technologies. So from that side, there's definitely a high demand, but we should not forget that there are also, I mean, as I said, the broad amount of consumers might not be, of data consumers or market participants might not really be interested in that yet.
Do you think that we need to establish new data standards for the efficient exchange and interoperability that you mentioned?
Yes and no. I mean, first of all, I think our current policies are quite standardized, are quite agnostic also to different use cases. But on the other hand, there's definitely for specific cases the need for change, as Stephen, for instance, mentioned, the control mechanisms that where we have the obligation in our policies that our customers control data in a specific way and entitle it. It doesn't really fit to the use case within blockchains or DLT frameworks. No, this is definitely one case where, from a licensing point of view, specific changes are needed, but from a technological point of view, I think, easy access, cloud provision, platform integration, these are all the topics that are most important. I mean, as I said before, people should be able to use their data everywhere they go within seconds or minutes, and not have the efforts of setting up a new feed and wait 3 months before it's onboarded.
I think if you can split between historical and real time, on the historical side, I think because cloud now enables everybody to get access to such quantities of data, it also then leads itself to more analytics because you can't physically extract those insights yourself. So I think what used to be the realm of kind of a few sophisticated quant houses is now, or quant firms, is now almost table stakes. I think there's a lot of level 3 data providers, as you mentioned, and I think all you have to do is follow a couple of European equity markets on LinkedIn, and you'll see it's just data point after data point, time to fill, percentage time at EBBO. So I think these level 3 providers are really leveling the playing field and making sure everybody understands what's going on from a market structure perspective, right down to the granular level. on the real-time side, where we're seeing most of the demand is in options. So we provide a real-time derivatives analytics feed that provides theoretical prices, the Greeks and vols, and we do that for lots of exchanges, not just our own. So we have them on Eurex, for example, and we're seeing more and more demand coming into Europe for derivative-based products. I think it's partly driven potentially by the increased scrutiny on some of the over-the-counter products like CFDs, and some of these brokers are now looking to diversify, keep a leveraged product, but potentially get into more exchange-traded derivatives. So we've certainly seen, the US derivatives model kind of getting imported into Europe, and I think that's a trend that we're going to continue to see.
Yeah, in terms of analytics, I think what we're seeing is that there's more and more demand to get a more granular and deeper level of understanding of the underlying content and how it interacts. So whether you kind of look at the index business and the sort of move towards more global thematic indices, looking for unique content that drives that. A lot of the stuff that we've seen in the digital asset space, so with what we have in SDX and Artex as well, which is kind of digital asset space around art. And even in the more kind of vanilla, or what we call vanilla data sets that you need around reference data and corporate actions, it's around, how can you deliver solutions that allow people to put in a question and get all of the corporate actions for a particular asset quickly. I touched on ESG earlier, but I think what we're beginning to see is that as you create more delivery mechanisms around technology, so if you have a digital banking use case that requires a web API, then being able to quickly draw down and build analytics and value-add content is what we're beginning to see. So the use cases are just becoming more sophisticated. And I think that's where the sort of line correctly begins to blur between content provision and technology build.
Okay, thank you. So for our final round, let's broaden our horizon again to future innovations and disruptions that extend beyond AI. Without being too repetitive, I would just like to ask you again, what other technical innovations do you foresee disrupting our industry, so especially DLT, blockchain, etc. But before we do this, I would like to focus a little bit at a significant development that we see in Europe, which is the introduction of a consolidated tape. And so would you, Eglantine, try to explain us a little bit what the concept of the consolidated tape is and what benefit it might bring to the market?
So to start with, I'm happy that you classify the consolidated tape within innovations. But joke aside, so the key point maybe to level set everybody is what it is about, because we have talked a lot about data. So basically in Europe you have more than 300 execution venues. So when you want to have an accurate view of what's taking place on the market, etc., you need to connect in theory to all these 300 and buy licenses, buy infrastructure, and have the different aggregation possibilities. So obviously there was a strong demand to make this more simple to the different market participants, and that's where the tape is going. So basically for equities and ETFs, the tape is going to consolidate all the different feed from all the 300 exchanges, depending on the asset class, but you see the big picture, and aggregate this into one unique post-trade feed with all the information on the trades. And for equities and ETF, we'll also have the pre-trade transparency, sharing the European best bid and offer. So it's going to be a new, in a way, set of analytics that is coming to Europe, because the fact that there's going to be only one city for a given asset class will make it a reference that people will potentially compare with. We can, back to your question, it can lead to some further discussion on the best execution, how all this is managed, how the tape is used with regard to best execution. We'll see that in the future. But definitely that's the reason, that's the main need. So why, back to the question, why is it an innovation? because we could just say, okay, we copy paste what is in the US, or we take the other and we just do it. But Europe is very unique. I said 300 execution venues. In the US, it's 20-ish. So it's different. In Europe, we also have the geographies to take into account. So aggregating data coming from Athens and also the ones coming from London or Stockholm is as representing some challenges. So what we do at EuroCTP is making sure that we define aggregation logic that really fits and make sure that the data that we will be pushing is accurate, is representing the actual state of the market. That's really what is keeping us busy now. Obviously, ESMA in the consultation will play a key role into defining some of the elements there. We don't know exactly yet what will be covered, but what we want to do is making sure that we involve the industry, we involve every participant to make sure that we have this innovation in the way of aggregating the data and pushing them to the market. Otherwise, that will become another data set on top of the petabytes of data that are currently stored. So we really have this obsession of making sure that it's actually useful for everybody.
Yeah, I just echo everything Eglantine says. It's really about democratizing access to data, so everybody has an affordable and consolidated view of the same kind of universe. Europe is fairly complicated, and that does discourage certain participants from partaking in our marketplace. And having at least a solid view of where the market is, plus full post-trade, is just going to be really beneficial from a transparency perspective. The other piece, Eglantine mentioned that you can still buy consolidated data today. You can go to any number of market data vendors, but you're still subject to the individual licensing of all the contributing exchanges. One of the innovations of the consolidated tape is that every exchange, unless you're a small exchange and you have a voluntary opt-in, will be mandated to provide your pre-trade as well as your post-trade data to the consolidated tape provider following the ESMA tender process. And then they will, as the consolidated tape provider, come up with a licensing framework, so it will be really a one-stop shop. If all you need is to kind of top a book, real-time European best bid and offer and post-trade, you'll pay kind of one license, one fee, and you won't have to go to multiple venues. I think that's really the key parts. Probably worth mentioning timings. As Eglantine said, there's kind of 3 different asset classes, 1 tape per asset class. Fixed income is going first in the European markets. So by Q4 of this year, the tender process will kick off. That will run for about 3 months. The equities tender will commence 6 months after that. So you're kind of talking Q2 25 with a bidder selected by the end of 2025, and then a reasonable period for a technical transition to go live. So, us in the room will have a European consolidated tape for equities and ETFs by early 26, which will just add another data source, potentially more analytics to our kind of fragmented market.
Okay. So then, Shay, do we have a view on this, or
on the what we're seeing coming down the road?
Tape, yeah.
On the tape, I think the guys have hit the key themes, right? I think the challenges are around the fragmentation, particularly in Europe. I think we're all watching with interest. I think Steve hit a really important point around the democratization of data. I mean, that is the way that the market needs to go and wants to go. But how long have we been talking about consolidated tape, right? I can't remember how many events, stretching back a long time, we've been talking about it. But it does seem to be gathering pace, and I think that the collaboration across various markets and participants will be key to get us over the line.
Okay, thank you very much. We're now coming to the question and answers part. So thank you very much for this very interesting and vivid discussion here. And now we are supposed to see the questions on the Slido. So please scan this QR code, and then we'll see what questions will come up from our audience. Maybe before the first questions, come in. Stephen, may I ask, as to my knowledge, the CBOE is not part of this EuroCTP joint venture consortium. What is your position towards the CTP? Is there a specific reason for not joining this initiative?
So SIBO has been, I would say, one of the most vocal proponents of the consolidated tape for the last 2-3 years, in stark contrast to actually many other exchanges. We've always had a kind of agnostic position. We want the tape to exist. We don't necessarily want to operate it, but we do want to make sure there is a competitive bid process so the right tape is developed for Europe at the right price point and it ultimately delivers on all of those goals. So I think we'll keep a close eye on the consultation. But yeah, no decisions made as of that yet.
Okay.
Our shareholding structure is open, so if they want to join, they can.
Okay, so first question comes in. So for Eglantine, what will you do if EuroCTP does not win the equity CTP bid?
Thanks for the trust. So basically, what I often say, like in my previous life, I've worked in market operations. So I'd rather focus on the plan A rather before working on the plan B. So as said by Stephen, the timeline will get the answer end of 2025-ish. So we are now like in May 2024, so we're still working on the plan A, but definitely it's significant investment ahead of the decision. So in the way we build the tape, we also want to make sure that potentially we can leverage this investment into doing something else in case we are not selected for the tape. But for now, our obsession, focus, day and night, passion, etc., is to build this tape that everybody has been talking about for so long with so much passion, and that's what I like doing. I'm really operational, so I like to translate a text into something concrete. And anybody, if you're interested in participating to the design, please reach out to me on LinkedIn. Happy to have some meetings to get your views and build the tape with you. So full focus on plan A.
Okay. I think the second question is also for you, or maybe to all. Is the consolidated tape expected to bring licensing costs down significantly over time?
So I can speak for the tape part. So basically, if your need is to have access to aggregated post-trade data, and if the BBO having the best limits at European level is suiting your needs, yes, it's going to be significantly cheaper for you.
Yeah, I would just add to that, for example, in the US, you have a separate SIP committee that sets all pricing, whereas it's going to be the successful bidder that sets the pricing in Europe. So there's still a bit of uncertainty about what that will be. It will come out throughout the entire bid process. But I think it's realistic to assume it will be cheaper than the sum of the parts. You know, it's not going to be an economically viable business if you do not make the tape accessible to the point of democratizing that data access. So I think at least the consumers certainly want a simplified market data licensing and framework. I mean, it'll be simplified in the fact that you come to one supplier and not 300 venues. But I think the details are still yet to be seen, but it will be cheaper, I would expect.
And the real-time feed will be free, real-time with no delay, free for retail participants as well.
Mm-hmm. Yeah. Okay. So next question is on AI again. So nobody talks about the potential energy and climate impact of using AI. What are your thoughts about this?
So I think this is a really interesting question, actually. And earlier when I mentioned the event I was at last week, I asked this very question. And as I said, there were about 10 experts of AI in that room. And no one really gave a brilliant answer, because obviously we're all worried about the energy consumption of cloud technology and how is that offset. The one half decent answer I heard was that we are kind of flying blind at the moment as it relates to client impact, because the data is so hard to get to. So a lot of it is on disclosed information and best efforts basis. So the one thing that was mentioned was that potentially if AI means we're not flying blind and we can actually get to the bottom of the impact we're having and we can consume all of that information to better effect, perhaps that is a way that was offset. But that was the best of not very many good answers I heard last week on this one.
But maybe it's another data set that we talked about. That what will be the energy consumption, the data storage? We are talking about huge amount of data being stored and stored many times by many players, etc. So, like, if there is one challenge of innovation in the future, will be to a bit what you are saying on combining public and private data and potentially mutualizing the storage of public data. So it doesn't necessarily make a lot of sense to store there, like maybe, I don't know, 1,000 of times in different data centers.
Okay. So next question is, will AI help uncover non-compliant data usage?
If I may, I hope what we are currently exploring is using AI for the licensing process to support that. And so ideally, AI will also help consumers to be compliantly licensed from the beginning. Not only but licensing in many other use cases, AI of course can be very helpful to analyze complex situations, and this is I think where AI can help. We have never thought about using AI on our side to uncover non-compliant data users. We haven't looked at it yet. Thanks for the idea. I don't think that we will follow that. It's what I said. We are more trying to develop solutions that make it easier for customers to onboard, to license our data products.
And potentially there will be some technological evolution, innovation that will allow to move away from the complex licensing, declaration, audit. So this is unknown for now, but definitely there is a need.
Okay. So I guess we take one more, then time is up. So does AI not open the door wide for money laundering? Like I can create my twin, etc.
I think it opens the door to a lot, and we're going to have to be careful how we incorporate it, right? There's the legal aspect in terms of if something goes wrong and it's generated by AI, who kind of holds responsibility for it? There's the security risk. I think there's a lot there, and it is scary when you look at what can be created out there. But as I was saying earlier, we need to embrace it, but in a controlled and measured manner. But yeah, I think all of these themes will have to be considered as we build them into our product development.
Okay. Then thank you very much for
Thank you, Stefan.
this very interesting, vivid discussion here, and thank you.
Thank you.